what is the income tax return? If you are a self-employed person, you most probably already know that you need to file an annual income tax return. However, this is not the only case when an income tax return has to be prepared and filed. In simple words, an income tax return, which is also called Form 11 in Ireland, is a calculation of taxes due on all your income, including the income from your job, your trading income, investment income, rental income, dividend income, any income. This return has many sections which relate to your personal details, residence status, income from all sources, available tax credits, exemptions, deductions, extracts from trading accounts. So it is really a very large document. It has a lot of sections. Many of them may not be applicable in the majority of cases, but they have to be included in the return and they have to be reviewed. And it's actually for the person which is not familiar with taxation, with taxes in general and accounting, it may be really difficult even to understand what they are asking for. So just to mention to you, because you will not be able to see this until you start actually filing your tax return. So it's good to know that this is actually not so simple. And that's the reason why the tax returns are usually prepared by an accountant on the basis of documentation submitted by you. As a result, the final tax liability or refund in case of a loss is calculated and the return is filed with the Revenue Office. Who has an obligation to file the return? Mainly sole traders would have an obligation to file annual income tax return in relation to their trading income, but apart from that, there are other groups who have this responsibility. For instance, the most common example would be company directors of limited companies controlling more than 15% of the share capital. Also, if your main income originates from rent, investments, or if you have any foreign income, pension income, or maintenance payments, you will have to file this income tax return. What are the deadlines? The annual income tax returns have to be filed by the 31st of October of the following year. So for example, by the 31st of October 2020, you have to file the tax return for year 2019 for the previous year. This deadline can be extended until mid-November if you file the return using the online service, which is advisable in this case. Also, a good advice would be not to wait until the last minute to avoid the risk of late filing penalties, which can really be substantial, up to 63,000 euro. And also, it's worth pointing out that all the accountants and tax advisors are really busy around this time, and it may be difficult for them to find enough time to look after your tax return. One more important reason to do it as early as possible is to prepare in case you have to pay taxes. Because if you do your tax return straight after the year end in January or February, you will find out how much tax you have to pay, but still you have time until October to pay it. So you have enough time to prepare, and because sometimes the taxes can be even a couple of thousands, and sole traders do not realize that until their return is done. So I would really advise you to do it straight away, as soon as possible after the year end. It would give you more time to prepare. When do you need to pay the income tax? The deadline, as I said, is the same, 31st of October. And moreover, apart from the tax due for the previous year, you also need to pay a preliminary tax, which is the estimated tax for the current year. So in case this is your first income tax return, you will pay the double amount of tax. You will pay the tax for the past year, and you will also pay the preliminary tax for this year. But it is also only in the first year. In the following year, you just pay the balance, the difference between the preliminary tax and the actual tax. It's very important to keep in mind, because I would say 90% of newly established businesses as a sole traders have no idea about that, and they are totally unprepared that they have to pay the double amount of tax after the first year. So just mark it and keep it in mind. One more thing to mention here, that the actual tax liability consists of three components. It's not only the income tax. The income tax is included at either at standard 20% rate or at a higher 40% rate, depending on your other income. The other component is the PRSI contribution, which is Social Security contribution. Usually it is 4% of your profits and minimum 500 euro. Another one is universal social charge, which is at the relevant percentage of your income. So these three taken together are your final tax liability for the past year. So it is not only 20% of your profits, as many sole traders wrongly assume